Hi, this is James in Full Capital, and I got Jeff King with Ramey King. Jeff, how's it going?
Going very well, James. Good to
Well,
talk to you.
thank you for coming on. You guys have been a longtime sponsor of the conference, and we have our next one coming up here in October. And so I want to bring you on and just have people get to know you a little bit. So let's just start there. Tell us a little bit about your background and sort of what you guys do.
All right. With our agency is Ramey King Insurance. We're an independent agent. We have specialized in real estate and multifamily since 1995. We're located in Denton, Texas, which is part of Dallas Fort Worth, but we work nationwide. I mean, most of our work is in Texas, but we're licensed across the nation, and uh, as things spread out, in buying spreads out, we can insure property pretty much anywhere.
Yeah, I saw a chart recently. We had an economist come on, and they had shown insurance increases the last couple years, and it was nationwide, but it was still pretty painful. So talk about sort of the state of the insurance market right now, out there for apartment owners specifically.
We're finally, and you're right, the last few years, probably the last 5 years, we've seen upward momentum on rates for a lot of different reasons. And finally, we're seeing some break in the action. And so we're glad to have that to provide to the customers. The owners want that, they need that to make these properties work. But we're finally seeing some break in the premium, and I'm glad to have that available.
So is
But
that more of a supply where more people are coming into the market, or what's driving the slowdown in increase or even a decrease potentially in the premium?
what I think it is twofold. I think there's some more markets that have come in,
Okay.
but also, frankly, I think the deductibles have been high enough. And I'm a property owner as well, so I'm buying the same coverage our customers are buying. But I think the deductibles have been high enough the last few years to lessen the impact of the claims, which has affected in a positive way to the loss ratio of the property carriers. And I think the carriers have realized that, and are trying to catch up. They've had some good years, so they're looking to maintain that. And to do that, generally, you have to have a better price. And that's what I think is happening.
So walk through the process if somebody, let's say they're out there, they're about to put a property, let's say under contract, or they own an existing property, when should they reach out to you guys?
They, I would say easily, once a property goes into contract, or even if they think that they've had an accepted LOI. It may still not go into contract, but there are some steps we have to go through to getting the formal proposal. There's documentation. We have to get loss runs, details on the properties, and it just seems to take time. A lot of it is waiting on the underwriters to give us our answers to decide on providing a quote, because we will typically go to 3 or 4 different carriers that we think will be competitive on a particular property. And most of that time it's just pushing, trying to get the underwriter to make their decision and we have to provide all the documentation, but it takes about 2 or 3 weeks, sometimes longer, if a property has had some issues or something like that, or if some of the loss ratios or details on a property are not as just not as available as sometimes happens.
Okay,
Uh,
so the let's say the buyer of the property, they're gonna send you stuff like, the rent roll, they might send you an OM or T12, and you'll take that information and submit it to different insurance companies, providers, and then answer any questions about or loss runs also, and then answer any questions from there about that whatever questions they have. And what's typical questions they have that come back?
and the concept, rarely do we have all of that at the beginning, which is
Right.
part of the issue. But the loss runs, I do just hitting 5 or 6 different issues. Loss runs are information from the prior insurance company referencing claims activity. If there's claims or no claims, it will have that. And the insurance companies predict the future by looking in the past. And many times we try to get 5 years of loss runs. Sometimes that's not as easily available. The other area, the details on the property, construction, square footage, annual rents are pretty easy to provide. Most of that's on the OM. Sometimes, but the update information, 4 areas of updates, age of the roof, electrical updates if there have or haven't been. And a lot of times there hasn't. If a property is 30 or 40 years old, there's probably not been any electrical updates. Unless a property might have been aluminum wiring that had to be pigtailed or had stab lock breakers where they pulled the breakers out. The other area is air conditioning and heating, and then the other area is plumbing. And you don't see that. Now, we do see some plumbing updates as people go and put in low flow plumbing and commodes, things like that. That does count. But a lot of
So
times at the beginning, that's not readily available. So we have to reach for that and help the buyer reach for that.
okay. And then you might, when you go through their inspections and things like that, they might be able to pull that stuff out as well
That's correct.
once they do the
That's correct.
walkthrough. Okay. And then sort of so right now, at a high level, sort of class A, B, C, let's say in Dallas, Fort Worth, what are those premiums running? I know that's there's a lot of factors that go into that.
A lot of
But
factors.
if somebody was gonna sort of ballpark it for their underwriting, what would be a good number right now to plug in for those?
I would say probably between 700 and 900. And of course, as we talk, these rate based on the square footage and the valuation. So it's
Right.
hard to just a firm number. But
Okay.
I would probably say on the low end might be 700,
Okay.
maybe up to 1,000 on larger square footage property.
Okay.
If you do have a property that has had some claims issues, something like that, you know, it may be higher than that. But a year or so ago, they were at probably 1,000 to 1,200 unit, maybe more. So we've seen some drops.
So let's say there are claims. Does that limit the number of people who do that transaction and thus the price goes higher, or does everyone just quote higher because they look at the history and there was claims? So now it's almost like, hey, all right, now that we got it, you got a strike against you. So now we're gonna it just is higher pricing across the board.
But it is higher. But the reason most of the time we're trying to put a property into a program,
Okay.
and the carriers will look at ideally 5 years of claims experience divided by 5 years of premium,
Okay.
which creates an equation we call the loss ratio.
Hmm.
And they're looking for a favorable loss ratio. And if it gets unfavorable, we might not be able to access one of these programs. So we may end up with a carrier that just charges higher. It's difficult in this business with this loss ratio, particularly in apartments, that one big fire, one big roof claim is going to throw a property out of balance. It's just even a big property that, maybe a 200 unit property, it might be paying 150,000 to 200,000 a year.
Right.
One hail claim could cost $500,000.
So then you're out of balance for those for like the next 3 years. Yeah.
One fire could burn. I always think of apartments as being combinations of fourplexes and eightplexes and 12plexes. It could take one 10 million or 10 unit property down or 10 unit building down. All of a sudden there's $1 million fire. It's
Right.
just the claims on properties, larger properties tend to be larger due to that.
Has anything, I know a lot of deals are getting done just through the agencies, sort of Fannie Mae, Freddie Mac right now. What are there anything that they're requiring right now that maybe has changed in the past, let's say 12 months that maybe you didn't have to have before, but now you do that, when you're coming up for renewal, people are having to add these things, anything like that on the insurance front?
We've seen in the last several months in liability coverage
Okay.
that many times if we have a property that may be in a higher crime area or has we see carriers put deduct or put exclusions or what we also call sublimits, where you might write $1 million liability policy, but a carrier may lower their limit for assault and battery claims or a dog related claims, things like that, or shooting claims, which unfortunately do happen in our world at properties. And we're seeing Fannie and Freddie not want those exclusions. So we have to go try to find a carrier that will have what basically a clean form, which may end up in being a higher rated carrier, more expensive carrier, I mean by that. So that's something we've seen really in this past year that is challenging. Depends on where property is.
And then, so if you're buying a property, you want to, if you're either invest in final or your LOI gets accepted, reach out to you guys, sort of start the process then.
Yep.
If somebody has an existing apartment and they come to you guys, how much time sort of before, because these things renew on an annual basis,
Yep.
how much time do you need to really look at a policy before that renewal, or can people come anytime?
They
Like,
can, they can come anytime. It's better to work with a renewal date. That's the easiest for someone to make a change if they're going to make a change.
okay,
It's I would say 30 to 60 days. Once again, we still have to go through that process.
okay,
Someone calls, today's April 15th, tax day,
yeah,
and say someone's insurance is renewing in 30 days, May 15th. And they'll want to quote first, they want to quote early enough so they can make some decisions. They don't want to quote on the last day, but we still have to gather that same information and then provide it to the same underwriters that go through that somewhat song and dance with them trying to get it. A little earlier is better. We try to get our renewals at 2 weeks ahead. That's our goal. Doesn't always happen. That way gives a person a chance to think about it and look at it, but probably easily 60 days if it's a larger schedule of properties or just a particularly large property. And so large being several hundred units all in one, maybe 90 days. Um,
does
it,
that
well, you
on
asked midterm. Many people look at, they may want to change midterm, and the things to think about, some policies have minimum earned.
right?
Typically it's 25 or 35%, so we need to go through that. But the other part, if a person cancels a policy to go to a different option midterm, most of the time the current carrier is going to charge them a short rate cancellation,
Hmm,
which is going
okay,
to cost them about a month worth of premium, about 10% of premium.
hmm,
So it's
okay,
not really their best option. I've had people ask, well, why would someone move midterm? And there's a number of reasons. Uh, Sometimes they can just get a much better quote somewhere else. It makes sense to move.
right.
Second, they need better coverage. Maybe they had a particularly poor insurance option due to claims activity or something about a property that's now been improved, where they just need better coverage or more appropriate coverage. And occasionally see something happen on an agent's side. An agent retires or something where their contact has changed and they're looking for someone that may understand their business better than another agent. So
Right. Okay, so yeah, depending on if you're buying a property or if you currently own a property, it's probably good to reach out to you guys just to sort of check in and see if there's any additional options for people right now.
it
And
is.
then I know you guys just released the new sort of indication
We do.
tool on your website that is constantly being improved based on feedback. Um,
James
it,
gave me some updates today on it, by the way, which I do appreciate.
So, maybe what's the best way for people to reach out to you and maybe talk about the website a little bit
Let
before
me
we jump
talk
off
about the
here?
website. We have several years, we do indications. And typically that's someone who's just looking at a property, has not decided to even make an LOI. They're just trying to do their, not due diligence. They're just trying to see if it pencils out. And so you can go to our website now, it's rameyking.com. There's an indication sheet on there. Just fill that out and you'll get an indication back. Right now, it's pretty much just for Texas, but we're looking to broaden it nationwide. We're working on that right now. But it doesn't ask about claims information, but it will give you a working number to plug in. But the other, let me close out something there. The other possibility is just give us a call, 800-453-9691. I'm getting emails and phone calls. Sorry about that. And or call any of our salespeople. We will be at the conference. We try to be where y'all are, where they're talking about real estate. We want to be there, so we can talk about real estate insurance.
Well, that's great, Jeff. I know you guys have come to our conference since the beginning, the first one in 2017. Who should come out to the conference? Why do you guys come out every year? Sort of, what's your experience been at the conference?
What I've seen, it's been great. I mean, it is exactly where we need to be. You have people, you have the leads, the syndicators, you have the people that have their individual properties, you have people that just they know they need to be in real estate, still trying to find where do they access that. And so it's and there's other vendors, other our friends that are vendors, all the different services provided in real estate. And plus, as y'all provide all the details on the mortgage to keep them in the market, it's just where we need to be. It's our customers are there and new prospects. So like I said, we've been there every year and enjoy being there. It's a lot of fun.
Well, we appreciate you coming on today, and we will see you in October. So I
All right.
appreciate you, and thanks for coming on.
All right, James, thank you very much.
All right, see you, Jeff.